Morning, market chameleons. Thanks for joining us for this Friday edition of the pre-market show. How are you doing this morning, Dima?
Good morning, Will. Good morning, everyone. Thanks for joining us.
Yes, big thanks to all you chameleons for coming out, chatting a little early on the YouTube. Listen, everyone, if your screen's a little fuzzy, it may be a setting on your end. I put out the things to do for the setting, or you could actually come to our Zoom meeting that we're having right now as well and join us there if you are a little fuzzy on YouTube. With that, do you want to start with the disclaimer?
Sure. So good morning, everybody. Before we get started, really quick, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, then go seek out either a registered investment advisor or call your broker. They should be able to help you with your questions. Really quick, there's the disclaimer.
Awesome. What's going on this morning in the pre-market?
Okay, so let me just bring up my screen. And as usual, we're going to start out just seeing what's moving in the pre-market hours. If you're joining us for the first time, these are stocks that are trading in the pre-market hours before the market opens. We have the most active, biggest gainers, biggest decliners. I think today we'll also maybe just take a look really quickly, anything going on around earnings. We'll take a look at any notable open interest changes in the options. We'll also take a look at some vertical spread option ideas from a screener. So I think that's what I have planned for today. I think that's all that I have covered. So before we go to the top one up here on the biggest movers, let me just take a look at if there's any big movers like in higher market cap stocks. So I see here that Deere, they reported earnings. That's up 3.2% in the pre-market hours on 69,000 shares trading hands so far. Tesla, of course, that's up 1.7% in pre-market hours. And what did you say? There's some interesting news on Tesla.
Well, there was just a little article in the journal this morning that said if you had bought Tesla stock, I don't know, 8 months ago, it would now be worth, instead of a Tesla vehicle, it would now be worth $750,000. So that was just
so instead of buying the actual car, just invest that money into a stock, and you would have made like $750,000. Yeah. So that's had a phenomenal run up, and so nothing so far. I don't see anything else like really big or unusual. So let's go back to the unfiltered report. I see here today there's a stock. Where's that stock we were talking about earlier? But okay, here CSL, that's up 6.8% on 280,000 shares. I see BKE, that's up 16.6% on 32,000 shares. Let me just see if there's higher volume ones. So this Friday just kind of seems a little bit slower. There's some catalyst news, it looks like here, but not that much shares traded. We could take a look at maybe this one, BKE and ZSL. Let me just go here and analyze it from a price action analysis. So let's just see in this BKE what's going on, what's trading in the pre-market hours. Here it is, BKE lead closed at $16.37 right now, trading $19.10 in the pre-market hours, up 16.7%. That's on 36,000 shares, so not very heavily traded here in apparel retail. Here it looks like this is based on the earnings announcement. So let's take a look historically how this stock performed after announcing earnings. So we see here, this is the last 12 quarters. So half the time the stock was open higher, half the time lower, for an average gain of 1.5%. From the open to the high, the average gain was 4.4%. From the open to the low, the average decline was 5%. It looks like it's about 50-50 from the open to the close after reporting earnings. 58% of the time it drifted higher, 42% of the time it drifted lower. The average on those returns was negative 0.9%. looks like next day or 2 days after, it had positive returns. So on average, the day after earnings, 75% of the time it was higher, for an average gain of 2.1%. On a 2-day hold, on average, it gained 2.8%, 83% of the time higher, 17% of the time lower. And this is a small market cap stock, 21.9 million. And right now, it doesn't seem like it's trading a very big amount of stock here. So you see here the minute VWAPs about, you know, an average, I don't know, an average probably 1,000 shares or less per minute. Let me see if there's any. It was kind of hard to find on Fridays, I think, are slower. So it's hard to find anything right now that's very active in the pre-market hours here. So let's take a look at, unless somebody has something in pre-market hours that they want to see. If you're not getting any kind of questions, then
none yet.
Okay, so let's take a look at, I know earnings are kind of dying down, so let's just take a look at what reported today. And we see here, there's Deere, PD. So Deere, that's up 3.3% in the pre-market hours. The expected move on that was up or down 4% heading into the earnings. We see PDD, that's down 10.2% in pre-market hours. The expected move on that was up or down 11.4%. Foot Locker, they reported in the morning, that's up 5% in the pre-market hours. The expected move on that was up or down 7.4%. So really quick, you see that at least for Fridays, usually slower, not a lot of stocks here in that earnings section. Let's take a look. In that case, I'm going to jump to the open interest. Let's take a look at the open interest report, see if anything interesting pops up in there. And will stop me if you have.
Yep. Well, D's going to that report. Listen, if you're on YouTube right now, we've got a bunch of people watching. Please give us a thumbs up. And remember, if you're not subscribed to the channel, it's a good thing to subscribe to. It helps us, all the chameleons out there, if it helps us. Plus, it gives you a notification when we go live or when Dima puts out a new video. Super helpful. Sorry, D.
Yep. No, thank you. And let's take a look at, so this is the open interest this morning. And what we'll do is look at any kind of significant open interest changes and take a look at it from the perspective of calls in this example. So I'm going to just look at options with that had at least 1,000 contracts or more increase in open interest. So we're looking at a specific option, not total, but for any specific option here. Let's take a look at that. That open interest increase had to be at least equivalent to 20% or more of the average daily option volume in that stock. So that's what I'm doing here, over 20%. Let's take a look at the call options. So I'm going to look at call options. I'm going to also filter for options that are at least 25 cents or higher in price. Let's take a look at an option that it increased at least 10 cents or more from on yesterday's at yesterday's close. And let's take a look at implied volatility on that option, up 10% or more. So the assumption is that that they were bidding up the premiums yesterday. Also, what I'm going to do, and this is a new filter, let's look at deltas of the option of from 0 to 50, so at least at the money or less. So at the money or out of the money options here. So two of them came up. ALBO, that stock was up 5.1% yesterday. The stock closed at 29.01. You see September 18th, 40 calls. The open interest there increased by almost 3,000 contracts. And that compares to an average daily volume of 610 contracts in that stock. That option was up $1.55 yesterday to $5.35, a huge premium in there. Implied volatility was up 14.7% to 261.4. So see, that's getting a long buildup indicator. Let me just see what that stock actually does. So that's a biotech stock, probably something coming up, some kind of news coming up. So you see there a big open interest increase in and out of the money call on the 40 line. EB, that stock was up 7.9% yesterday to $10.51. September 12.5 calls. September 18th, 12.5 calls. That open interest increased by 1,550 contracts. That compares to an average daily option volume of 2,391 contracts. That option closed 38 cents, up 23 cents on a day. Implied volatility on that was up 13.4%. That's getting a long buildup indicator here. Let's take a look at what that stock does. So that's software applications, company over here. Let me just take a look. So they're coming in after that upside call, the 12.5 call for 38 cents. So that's really quickly some of the things that,
Hey, D, while you're talking about call buildup and the options, we do have a question from Baiju Thomas. He's asking, like, how do we know? How does Market Chameleon present the data like the calls are being bought?
So you know, there's no indicator calls are being bought or sold, because remember, there's always a buyer and a seller. Every trade has a buyer and a seller, right? So when we say, are the calls, so we're presuming that if the implied volatility is going up, then people are bidding up premium, right? Just like if a stock is going up, more buyers than sellers, right? If the implied volatility is going up, more buyers than sellers, because it's pushing up the premium prices. In addition to that, if open interest is increasing, that is indicating to us that there's more positions being open. There's new positions being open, more risk being taken and being held than the previous day. So that's where we're getting so we're putting together the data to make that assumption. Okay. There's no such indicator though that these, you know, calls are being bought, calls are being sold, because every transaction has a buyer and a seller, right? Every trade has a buyer and a seller. So what you're trying to do is interpret from the information coming in, what do you think is transpiring? Hopefully that helps.
That helps. Awesome.
Question. Okay. Anything else with on the open interest?
Nope, you're good.
Okay. So let's take a look at the credit put spreads screener, because I do get questions to show more examples on this. And what this is just looking at a vertical, you know, credit put spread, selling a put spread, selling a put on one strike, buying a put on the other strike, and that has usually a long, you know, bullish bias or long bias. I'm going to go here to some of our preset filters just to see what comes up. Let's take a look at best by theoretical edge. So what this is looking at is it's going to scan the markets for all the options and all these combinations, and look for option put spreads, credit put spreads with positive theoretical edge, historical win rate of at least 70% or above, and present us like with one of the best opportunities given these filters that I've set above here. So here we go. Let's take a look at what it filtered out. So in Apple closed yesterday at $473.45. It's saying that on the September 4th expiration, selling the 470 put, buying the 465 put, you get a $2 credit as of yesterday's close. We think theoretically it's worth $1.37. So you're selling it above $1.37, $2. That gives you a theoretical edge of 21.1% with a historical win rate of 72.1%. So if that stock remains on September 4th expiration above 470. That's your lower strike. Right now it's 473, 473.45. As long as it stays above 470, your return on your risk is 66.7%. In other words, you're risking $3, right? That's so if the stock crashes below 465, you got to buy that put spread back for $5. You sold it for $2, you lost $3. You're risking $3. Your potential gain is $2. So as long as stock sits here, you're going to make that 66.7%. Stock goes higher, you make 66.7%. Stock goes a little bit lower, as long as it stays above 470, you're making that 66.7% return in whatever, what's that, like 2 weeks, 3 weeks left. Microsoft, its stock closed at $214.44. It's looking at the September 4th expiration, selling the 212.5 put, buying the 207.5 put for a credit of $1.46. We think theoretically it's worth 79 cents. That gives you a theoretical edge of 19% with a historical probability of profit of 79.3%. So that's using actual historical data of the stock behavior. That, as long as the stock stays above 212.5 at expiration, your return on your risk is 41.2%. You got a 1.6% cushion to your break even. In other words, stock can, if it doesn't go up, it doesn't stay there, it goes down, you got 1.6% before you break even and start losing below that. Facebook closed 269.26. This is looking again September 4th expiration, selling the 267.5 put, buying the 262.5 put. That's $1.80 credit. As of the close, we think theoretically it's worth $1.25. That gives you a 17.1% theoretical edge with a historical probability of profit of 73.9%. If the stock remains at above 267.5, that return on your risk is 56.3% with a 1.3% cushion to break even. Let's take a look at Alibaba and Berkshire Hathaway. Alibaba, $257.93. That's the close on that stock. This one's looking September 11th expiration. Selling the 255 put, buying the 250 put for $1.80 credit. We think it's worth $1.40 based on historical data. That gives you a 12.5% theoretical edge with the historical probability of success of 70.3%. And that would be a 56.3% return on your risk on September 11th if the stock remains above 255 or higher. There you get a 1.8% cushion to the downside. This is Berkshire. That's the Class B stock, not the 50,000 or whatever it is, $100,000 stock. That stock closed at 206.34. Let's take a look. This one filtered out the September 18th expiration. That's saying selling the 205 put, buying the 200 put on the September 18th expiration, get a $1.53 credit. We think it's worth $1.25. Theoretically based on historical data, so you're selling that above the 125. That's giving you a theoretical edge of 8% with a historical probability of profit of 72%. And that will give you a return on your risk of 44.1% as long as that stock is above 205 at expiration, and you get a 1.4% cushion.
We had a question. They're asking what the moneyness indicating on the put spread.
I'm looking at the moneyness here.
All right, Marty, please explain what you're asking.
Oh, wait, here, this one?
Yeah.
This one. Okay, so here it's just a different way of filtering out spreads, because the spreads, it could span out of the money, in the money, at the money. So it's looking at, where the strike price is relative to the stock price. So you could just filter it out this way. If you wanted, you could do by delta, or if you want to do where the spread is in the money, out of the money. So the stock's way above, spreads in the money, stocks below, it has to go higher. So that's how, it's just a different way of filtering those strikes.
Awesome. There you go. Thanks for the question, Marty.
Yep. Thanks. Let's do another one. We'll do one more, then let's take a look at the unusual option volume report.
Well, after you look at this one, we have a question about a spread. I don't know if you can look at it.
Sure.
Well, why don't you do what you're going to do, and then we'll get to it.
Yeah. So let's do Visa. That closed 204.11. This filtered out the September 4th expiration, selling a 205 put, buying the 200 put for $2.08. We think it's worth $1.36 based on historical stock behavior. That gives you a theoretical edge of 24.5% with a historical probability of success 70.9%. If the stock sits here, actually that's a 40.8% return on the amount you have at risk. You have a little bit of a cushion there, 0.6%. All right. Well, what was the? It was
concerning Apple. I'm going to walk you through. I got to go. We've had a bunch of questions, but this is from Mike, who seems to be on every day. He's a pretty active chameleon. He says, please evaluate selling the 470 butterfly in Apple, $5 wide strikes, expiring today. I don't know if so he wants to look at a butterfly spread, the 470 strike, and then doing the strikes $5 wide.
Let me take a look. Let me go to that. I don't think we'll have one that's with 1 day to go, but let me take a look. Let me just take a look at what that looks like here. So here's what Mike's asking: selling a butterfly.
He's looking at selling. He wants to evaluate selling. Obviously, someone would be buying it as well. So
all right. So he's looking at the 470 butterfly here. So that's selling the 470 put, selling the 470 call. Hold on a second. So one thing to keep in mind, the stock is 473.10. It's not right at the 470 line. It's already in the money. So you got the 470 call, selling the 470 call, selling the 470 put. So there you have that 470 straddle you're selling, and he's saying buying the $5 out of the money wing.
Yep.
At the 465.
He's trying to play a pin, is what he's trying to do today.
To play the pin.
Yeah.
Okay. So kind of like this is what it's going to look like. So this is what it's going to look like today at expiration. So you wanted to pin right there at 470, right there. There's your sweet spot, 350. Stops already right here, 473.45. So if it closes here, you're, 473.10. You're already like, at you're almost at your break even, maybe 40 cents. If it closes right here, obviously the stock that's as of yesterday's close. Now it's already 476.85. So these are closing prices. The options didn't open yet. They don't trade in the pre-market. But that's what it looks like today at expiration. Let me just take a look here. So, if you sold that at 350, we think it's worth 381. So it would not be a good sale. So here it's telling us it's a better buy.
Yeah, I think one of the things Mike may be looking at, which when we were on the floor, a lot of people played around with this. I have no idea what the statistics say, but he's looking at the 4.7, the open interest. I don't know if you want to show everyone how you can find the open interest, that drop down on the option chain.
So he's looking at the open interest. He just wants to see the open interest.
Well, he thinks, actually, D, is everyone, is the sound okay? Does everyone, your sound seems a little garbled right now.
Can you hear me? You want me to come out and come back in?
Yeah, that'd be great.
Okay, let me do that.
All right. Well, D disappears for a second, and he'll be back very shortly. Hey, thanks for the questions, everyone. We try to get to what we sound. Do I sound all right? I'm waiting for your answers. But anyways, Deepak RoboCop. That's funny. Remember to subscribe to the channel. Give us likes. It's a big deal. Dima, you back? Dima is still not back. I am okay. All right. Keep the questions going. And listen, if you don't get a question answered and it's something to do with the technical aspects of Market Chameleon, always email us, support@MarketChameleon.com. We try to get to everything. And I know people are asking for certain things on the site. We do take those serious. I've taken the couple that came through the day, and I'm composing an email as the show's going to get to the development team. So everything you give us is looked at, and it just, their priorities, things going on.
Hey, Will.
Hey, Dima, you're back. Good to have you. All right.
So what were we looking at? Apple?
We were looking at the Apple, and we were looking at the 70 line butterfly. I think something that's being looked at, and I wanted you to maybe drop down so everyone saw how you see the open interest that exists at every strike. I think something he was thinking about was maybe a draw, because it's one of the biggest open interest lines, that there would be some sort of pin there. Something I know when we were on the floor, people talked about that. I never put much faith in it, but they're two, and just so he's aware, the 70 line's got a large open interest, as does the 80 line. So, but I just thought it is interesting. We have that drop down. You can get all the Greeks plus the open interest.
Hey, Will, sorry, I lost you again. That was my fault.
No worries. Just,
yeah,
I was just talking about the open interest, how you can see it, because I think one of the things that he was looking at was the open interest of that line, the 470 line.
Yeah. So here's the open interest on the August 21st. So that's your, here's the 470 line. So you got like 26,000 contracts, but you can see here there's a big concentration all over here, around these strikes.
Yeah, well, the 480 has just as much, it seems. So.
Yeah, let me take a look at, let me just take a look at here the open interest, and I'm going to take a look at August 21. So here it tells you the open interest in the calls and the puts as a percentage of average daily volume. So here you can see here that the 470 strike, the open interest, if all the options were exercised, that represents 5.9% of the average daily option volume. I'm sorry, of the average daily stop volume. So whatever Apple trades on average per day, if all of them got exercised, that represents 5.9% of the average daily stop volume in Apple. So you could see here, very close, 475 line, same thing, 5.1% of the average daily volume. If you go to the 480 strikes, 6%. All right, so all these strikes pretty much like there's your, your range over here, 470 to 485. The next stop, if it really blows through, there you go, 500. So hopefully that's helpful.
Yeah.
But that is a relative, that's a quick way to see the relative open interest versus average daily volume in that stock.
Cool.
Yeah. Was there a different question? You said you had a couple ones.
Well, there was one person wants to take a quick look at the unusual option volume. You only have 6 minutes left. So
let's take a look at yesterday's unusual option volume report. And I think this is actually, we added something yesterday new. So this is looking at the total call notional, the total notional dollar value of all the calls traded and all the total dollar notion of the puts traded. So I think I saw here. Let's take a look at maybe the higher market cap stocks, see what's on there. So I see here Uber, Tesla. So here Uber that traded 3.6 times its average daily option volume. We see $21.7 million worth of calls trading, in notion over 16.9 million in puts trading. Tesla, that's a big one here, $3.9 billion of calls trading hands versus $925 million worth of puts trading hands. So, and we know Uber and Lyft that was in the news yesterday, right? Something with Canada that they might have to suspend services.
Yep.
Well,
California.
I mean, sorry, California. Sorry,
Yeah.
California.
Well, yeah. The state, through a lawsuit, is trying to mandate that all the drivers are full-time employees.
Right.
And,
is that getting pushed by the drivers themselves, or is that?
I think it's other people. I mean, I'm sure some drivers wouldn't mind it, right?
Right.
But it makes it almost impossible for Lyft and Uber to operate with that forced mandate. And
right. Because their model is they're just the technology behind it, right? They don't.
Yeah, and it's just a whole. I mean, through our employees, their dynamics that go into having an employee and regulation that the app just can't handle the way it's set up now. I mean, you pull up. I don't know if you've ever tried it, but you pull up the app now, and it's super easy to become a driver. Once they do the back checks, right? You become an employee. It's a whole different model. So.
All right, Zoom here, real quick. Unusual option volume that traded 1.9 times its average daily volume. We see $118 million of calls traded in notional value versus 17 million in puts. There's going to be upcoming earnings on August 31st. Gold that traded 1.8 times its average daily volume, $7.4 million in notional value in calls trading versus 3.6 million in the puts. Intel that also made the list, 2.8 times its average daily volume, $25.9 million of calls traded in notional value versus $11.8 million worth of puts trading. So that's really quick what's been going on in the unusual option volume report for stocks that are market cap 50 billion or higher.
That's great. It was good because we only have about 2 minutes left. One last question. We have a lot of new chameleons on today, sure. And they were asking how long has Market Chameleon been around? Since you are the king chameleon and the creator, I just figured maybe you'd want.
Yeah, I'm trying to remember when we first launched. It might be already 3 years.
I think it's a little more than 3 years. Yep.
Yeah. So probably around 3 years now, maybe even a little bit longer. So, yeah. So we're really happy that we're able to, be out here 3 years. That's great.
Yeah, no, it's awesome. And it doesn't work without you chameleons. Thanks again for joining in the show. I think Monday we may just have a webinar in the evening. We have something going on in the morning. We're not going to be able to do our morning show. So we'll see you on Monday evening. That's correct. Right?
Right. Yeah. So next Monday morning, we won't be able to do it. Something's come up, but we'll start Tuesday and following. We're going to start, be doing the morning show, but Monday night, we're planning to do a webinar.
So webinar Monday night, and we'll see you on the pre-market show Tuesday morning. Have a great weekend, everyone. Stay safe. Bye.
Thanks, everyone. Have a great weekend. Bye.